Hello, it's Simon Zutshi here, and in this property education video, I want to talk about the fact that we are seeing interest rates being slashed by most of the high street banks. Now, in this video, I'm going to talk about what does this mean for you and for your property investing? What does it mean for homeowners? What does it mean for buy-to-let property investors? And are we going to see interest rates come down, which means we're going to see the property market go up? Or is there something that everybody is missing? And I think there's something that most people are not talking about now that might have a negative effect on the Bank of England interest rate. In other words, the Bank of England interest rate could actually go up. So stay tuned to this video. I'll explain exactly what I mean. I've been investing in property myself since 1995 and helping people like you to become successful investors since 2003, when I founded the Property Investors Network, which is the largest network of investors all over the UK and now in the Netherlands and also in Dubai. And I'm also the founder and author, of Property Magic, the Amazon #1 property bestseller. And I think it's really important to look at what's happening in the market all the time, because this does affect your buy-to-let property investing. So let's talk about the main news. If you've seen the headlines recently, you'll realize that many of the high street banks are reducing the amount they charge on their mortgages. Some of the headline figures: Halifax, which is the largest mortgage lender in the UK, they reduced their rates by something like, I think it was 0.83%. That's a huge, huge discount. HSBC recently came out, they brought their rates down, and they've actually now introduced a rate, which I think is something, let me check my notes, it's something like 3.94% for a 5-year fix. Now that's a little bit, quite a bit below the Bank of England base rate, which is currently 5.25%. Many industry experts are talking about potentially an interest rate war where the mortgage companies are going to all compete, because mortgage companies have to lend money in order to make money. When rates have been really high over the last, they've been growing over the last 18 months really, up to this 5.25 for the Bank of England base rate, what it means is for many homeowners who've come off fixed rate mortgages, they've seen their monthly mortgage payment double or even triple or even quadruple, and many property investors have seen the same thing. What it means for many property investors who had the benefit of incredibly low interest rates for over a decade, but the Bank of England base rate was only 0.5%, so their effective pay rate on their buy-to-let mortgage might have only been 2-3%. It means people are making lots of money from their buy-to-let properties. However, because interest rates have gone up so much over the last 18 months, what it means is there are many buy-to-let landlords who have properties where their monthly interest they're paying is actually more than the rental income they're receiving from that buy-to-let property. So they're making negative cash flow, which is obviously not a good situation. Now, obviously, we have seen rents shoot up massively as well, as much as 20% increase in rents over the last 18 months or so. So again, this helps with interest rates going up. But this is one of the reasons we're seeing many property investors looking to sell their properties at the moment. Obviously, with the market falling generally in 2023, it means it's not been a great time to sell. Now, there were a couple of months at the end of 23 where actually prices jumped up a little bit, but that was mainly skewed by larger properties that were starting to sell on the market again. I personally believe that we're going to see property prices come down slightly in 2024 and only start to go up when the Bank of England base rate starts to come down. Now, having said that, with the recent changes that the current lenders are doing by bringing their rates down, I think that's going to stimulate the market. Particularly a lot of people who've had mortgages that have gone to variable rates and they've not been able to refinance those properties because maybe the rental income wasn't enough, or if it was their own home, they couldn't prove affordability, so they've been stuck on this very high rate. Now that rates are coming down, now, literally the next month or two might be a great time to look at refinancing some of those properties. Now, just to be clear, I'm not a financial advisor. I can't give any financial advice. You need to speak to qualified professionals to get that advice, but I'm certainly looking at my mortgages. And yesterday, I reached out to one of my lenders to change from the standard variable rate onto a new fixed rate because they just brought their rates down. I thought I want to lock that in. Now, a lot of people might think, well, maybe we should wait because the reason that all of these major banks are slashing interest rates and bringing interest rates down is because they believe that inflation is going to come down, and thus the Bank of England is going to reduce the interest rate. Obviously, Bank of England uses inflation as a macroeconomic tool to control inflation. When inflation goes up, they rise interest rates, that slows the economy down, then inflation comes down and they bring interest rates down again. Now, a couple of things. First of all, I believe right now, at the time of filming this, the inflation rate is something like 4.2%. So it has definitely come down. You might remember in 2003 it was over 10%. So it's come down more than halved, which is what Rishi Sunak was looking to do. However, the inflation rate is still over double the Bank of England target of just 2%. So it's got some way to come before interest rates come down. Now, the next announcement by the Bank of England monetary policy is on the 1st of February. And I think many lenders and many people might be expecting interest rates to come down because inflation has come down. But I'm not so sure. There's one big thing that I think a lot of commentators are missing out on. We've heard recently in the news that in the Red Sea, the freight shipping containers are being attacked by terrorists and bandits. The Houthi militia are doing this in response to all the conflict in Israel and Gaza Strip. So particularly from Yemen, they're getting lots of attacks in the Suez Canal. Now, what this means is a lot of shipping companies, instead of going from Asia through the Red Sea and the Suez Canal, what they're doing is they're diverting to send the ships around South Africa. What that means is it's an extra 4,000 miles on the trip. It takes about an extra 9 days, and it costs an extra £800,000 to extend the journey of these big cruise ships. What that means is that the cost of freight is jumping up. The cost of sending a container from China to Europe is something almost doubled, if not even tripled, over the last couple of months because of these attacks happening on the freight ships. Now, this is going to have a direct impact on inflation in the UK. I was speaking to someone I know, he imports goods from China. He has baby car seats and prams and things like that. And he was saying, because of the increased cost in shipping, they're going to have to put their prices up almost 20% within the next month just to cover the increased costs. So anything that's coming into Europe from China and into the UK from China is probably going to increase quite significantly in the next month or two. Now, it might take a while for that to show in the inflation figures, but although inflation is coming down, I suspect, unfortunately, because of what's happening around the world, we might see inflation actually start to go up again in 2024. Now, I'm sticking my neck out here, I'm making a bit of prediction. I might be completely wrong, but just looking at supply, demand, looking at logistics, I think we could see inflation increasing. If that happens, I don't think the Bank of England is going to reduce their base rate from 5.25%. I did expect before all this happened that was going to happen maybe Q2 of 2024, but I think it might be a bit longer before the Bank of England base rate comes down. And if inflation really does go up, we might even see the Bank of England bringing in more interest rate hikes. So just something to be careful of. That's why I'm saying I think if you're looking to remortgage, maybe now the next month or two might be a good time to do it, while most lenders expect the Bank of England rate will come down, because if it doesn't come down in the next couple of months, or even worse, it goes up again, they might readjust their rates up again. So I think now might be a really good time to refinance those buy-to-let properties and also your own home. Obviously, do take advice around that. So I hope this video has been useful. Do come and comment below. What do you think is going to happen to interest rates? What do you think is going to happen to the property market? We had many people predicting a property market crash because of these interest rate hikes. For the last year, I've been saying I don't think we're going to have a crash. I think we're getting more of a correction. I still think we've got some way for prices to go down because they're still higher now than they were pre-COVID. My prediction was they're probably going to come back to COVID rates. That hasn't quite happened yet. So really, it depends what happens to interest rates and inflation, and that will have a knock-on effect onto the UK property market. My feeling is that As long as you find a good property deal that works right now, that you know you can rent out, that gives you good cash flow, I would just buy that property. Don't worry about short-term fluctuations in the property market, because if you're reading and following my rules in Property Magic, the 5 golden rules, rule number 4 is we hold for the long term. So if you're holding for the long term, as long as you know it's going to make cash flow, and as long as you know you can rent it out, it doesn't really matter what happens short-term fluctuation. The reality is there's not enough accommodation in the UK. Both Labour Party and government think we need 300,000 new homes every year. There's no way we're building anywhere near that. So very soon, probably in 2024, I believe certainly in 2025, we're going to see property prices start to go up again. So buy property now, sort your finance out. Who knows what's going to happen to interest rates, but I don't think we're going to see a property market crash. I think we're going to see prices probably come down a little bit and then start to recover. But I'd love to know, what do you think? Put your comments down below. And if you like this video, please like it. It really helps the algorithms. And if you haven't subscribed to this YouTube channel, come and subscribe right now and hit the bell icon to make sure you get timely videos when they come out like this one. As ever, I encourage you to invest with knowledge, invest with skill. See you very soon. I do hope you got massive value from watching this YouTube video. I'd encourage you to click on the link below to come and do the online training with me. And I've got another video lined up for you, which I think is also going to be really useful, that you should watch once you've registered for the online training with me. So invest with knowledge, invest with skill. I'll see you very soon.